Good afternoon. Let's get right down to business here. We're doing it live, doing more at 4 weekday afternoons, right after Guy Benson and just before Randy Wang on the 790 KBC News Blitz at 5. Mottek On Money, live on the air, 790 KBC, streaming live online worldwide, kbc.com, and of course the on-demand Mottek On Money podcast, kbc.com, Apple iTunes, YouTube, all your favorite podcast platforms. Stocks taking a wild ride today. Crypto's tanked. Gold moved higher in a head-spinning day with NVIDIA and the other big AI and tech names in focus. Stocks pulling back, closing sharply lower after a triple-digit gain early on after a whirlwind day of trading. That began after NVIDIA posted strong results. The Nasdaq Composite leading the indexes lower today after being up more than 2% earlier. NVIDIA gave up an even bigger gain and finished the day down 3.2%, down nearly $6 at 180 and change. The Dow came in for a closing loss of 387 points. The S&P 500 down 103, and the Nasdaq down 486 points. The VIX index, the volatility index, moving higher by 12%. Gold got a pop of 1550 right now at 4,075 and change. The cryptos, well, it's been getting ugly this week. Let's bring up the latest here on how the cryptos are looking. With Bitcoin at the moment at 86,535, about 30,000 below the recent all-time high. And Ethereum at 2,843, cracking below 3,000. Solana at 134, and Doge at the moment just below 15 cents. Joining us live now, somebody who's had a very, very busy day, and that is the one and only Daniel Ives, leading tech analyst in the world at the moment, managing director and global head of technology research at Wedbush Securities. Daniel Ives, thank you very much for taking the call here on this big day here.
Yeah, great to be here, Frank. I mean, a very volatile day.
Most definitely. Give us your impressions of NVIDIA's earnings, the move in NVIDIA, first of all, and of course, today's market action.
I mean, Frank, it was a masterpiece quarter, right? I mean, they blew away in terms of accelerated growth. You have over $500 billion of revenue that they see with Blackwell and Rubin. It was anything you could have hoped for, and I think stocks selling off, I think, was a shocker to the market, combined with what we're seeing in crypto, and it speaks to this risk off that we're seeing in this market.
All right, so a lot of talk leading up to all this, to an AI bubble and all that. After all of this, what's your answer to those concerns now?
Frank, they answered that loud and clear. I mean, with the AI bubble, I mean, they beat numbers, if you look at it, by combined $5 billion this quarter and next quarter. So they answered loud and clear the bubble question. Look, investors continue to be concerned. But as I've said, this is a buying opportunity. We are still in year 3 of an 8 to 10 year build out.
On the air live with Daniel Ives at Wedbush, and also in the mix, this jobs report we got today, adding apparently to concerns that the Fed will not cut rates next month, and that, of course, is a big thing weighing on the market at the moment. The bets have changed quite a bit in the last several weeks. So what do you think the Fed is going to do, and what impact will that have on the markets?
I think that's part of it, Frank. It's like worries that the Fed's not going to cut in December. Maybe some hawkish comments from the Cleveland Fed. I still think you get a cut in December. And the reality is that Powell replacement's going to be there in May. It's going to be dovish going into the next 6 months. And I think ultimately you're going to get 100 bips of cuts next 6 months, one way or another.
All right, what are your impressions of the latest crypto action here with Bitcoin selling off big time since hitting a record high of 126 plus, back down to 86 or so right now, 86K?
Look, I mean, it's been a panic sell-off in crypto. I mean, we've seen it across Bitcoin, across ETH. Obviously Tom Lee, one of my good friends. I mean, I concur with him. This is not the end of this Bitcoin rally. I think it's technical. I think you've seen a lot of margin calls, but I still believe the path for Bitcoin, like I've said, 150, 200,000 is much higher. But we're definitely going through one of these white knuckle moments from crypto to tech stocks to across the board. But Frank, it's not time to head for the elevator. It's the time that you own tech stocks here as well as crypto.
All right, you're big on WorldCoin there at 8Co, where you head up 8Co Orbs, right? So what's happening there, and what's happening with WorldCoin?
Yeah, I mean, look, I mean, we put out our chairman message this week. You know, anyone could check it out. I mean, you're seeing more and more adoption. I mean, the Gap actually they're going to World, which is just more and more authentication from a human proof perspective. And everything we're doing at ACO is really around driving the enterprise. In this AI future, authentication is going to be a huge layer of that. That's where we play as ACO as well as World and everything that we're doing with Sam Altman.
All right, and then there's gold, analog gold, and you've had your eye on that too, as we all have, hitting a record highs above 4,500 this year, and right now holding still above 4,000. What about gold in all this, which is held up above 4K?
And the path to gold's 5,000, right? I mean, but you're seeing a sell-off in crypto, sell-off in tech, sell-off in gold, sell-off in silver. But it speaks to this. It's a de-risking, it's a de-leveraging that we're seeing over the last few weeks. This is not a bubble. It's not the end of the tech bull market, not the end of the gold bull market.
All right, some of the crypto-related ancillary equities have also taken a hit. For example, Coinbase, let's take a look at that one, for example. Let's bring it up here, pulling back nearly $20 today at 238 and change. What about some of the ancillary crypto equities here?
Yeah, I mean, I think Coinbase, obviously MicroStrategy, Bitminer, you know, in terms of where they've had the big sell-offs. But Frank, my view is like, this is just more of call it a winner, you know, in terms of a nervous period that we're going to see tech, crypto names like MicroStrategy, Bitminer, I think go a lot higher as we go into year end.
Any specific places where you are putting money now and or taking it off the table?
This is not time you take money off the table. It's a time that you would get aggressive to own the winners in tech, in crypto, in AI. It's my view, NASDAQ, as I've talked about, NASDAQ 25,000 going into next year. And for the first time in 30 years, the U.S. is ahead of tech when it comes to, the U.S. is ahead of China when it comes to tech. That is a good time to be owning U.S. tech, from NVIDIA on the sell-up to Microsoft to Oracle to Palantir. That's my view.
On your line with Daniel Ives at Wedbush. Anything else that caught your attention in the latest earnings parade? Walmart, for example, was rallied today.
Yeah, and look at what Walmart talked about. They talk about using AI. What is that bullish for? All the names they talk about. But I think it shows the consumer is a lot healthier than maybe some of the fears out there. We're nowhere near recession. It's a choppy economy. Fed's going to cut. And I think this tech bull market has 2 more years left.
What's your outlook on the holiday season here?
I mean, outside of the nice, you know, suit I'm going to buy for you in Beverly Hills, a little Christmas present. Look, I think it's actually going to be a pretty positive, I think Christmas and holiday season from a retailer perspective. Retailers have sold off significantly. You know, you could definitely see some of the higher end chains maybe see some pressure, but I think overall it's going to actually be up. And I think Black Friday, when you look at it, we're probably up anywhere from 5 to 8% year over year.
All right, and you're a big world traveler. The airlines, of course, had the issues with the shutdown and all of that. Sounds like you're at the airport now. What about the airlines?
I mean, look, every airplane I've been on for the last 50 flights is packed. It's pretty bullish, right, in terms of travel. And I think the reality is that the consumer environment is a lot better than people fear. Maybe it causes the Fed to do a little sort of, second look, but I still think Fed cuts into December.
Let me know when you need to jump to the premium first-class line here. It sounds like it's the airport now.
Exactly, Frank. I'm on, but again, I know you fly private. I fly public. I mean, we can't all be Mottek. So it is what it is.
Hope you're heading in this direction. Daniel Ives, thank you very much for taking the call here on this big day here. You've had a very busy day since the wee hours of the morning. Dan, thank you very much for coming to the line here. Fantastic. That is the one and only Daniel Ives from Wedbush, who's the top tech analyst in the world at the moment, managing director and global head of technology research at Wedbush Securities, which happens to be headquartered right here in Southern California. Live with us here on Mottek On Money. In case you missed it, the Dow down 387 at the closing bell. It had been up about 700 early on, closing to 45,752. As you may recall, the Dow was above 48,000 just about a week or so ago, hitting an all-time high. Pretty big sell-off. The S&P 500 down 103 points today at 6,539. And the NASDAQ giving back nearly 500 points, down 486 at 22,078. The volatility index spiking today, up 12%. The yield on the 10-year note now at 4.09%. NVIDIA stock on its earnings news had a big bounce yesterday, pulling back today by nearly $6, down $5.88 at $180.84. Tough week or two for the cryptos here. Let's take another look at that. Let's bring up the latest numbers here. For example, on Bitcoin, we're looking at 87,169. It was in the 86.5 range when we started this broadcast this evening. Ethereum at 2,854 at the moment, cracking below 3,000 the last day or so. XRP at 201. Solana at 134. Doge at the moment at 15 cents. Cardano at 43 cents. Taking a look at gold, it is held up above 4,000, up 15.50 at the moment at 4,075.50 an ounce. Silver up 18 cents at 50.49 after cracking below 50 just recently. Walmart on its earnings news, let's bring up that one. World's largest retailer coming into the holiday shopping season, was up 6.50 today at 107.11 on its latest earnings report, which came in better than expected. It was a pretty wild ride today, roller coaster ride for the stock market, with the market giving back early gains and closing sharply lower today after NVIDIA posted strong results. The NASDAQ composite leading the market lower after being up earlier today by about 2%, closing down more than 2%, down 2.2%, with NVIDIA giving up much of its gain and finished the day down 3.2%. As the Wall Street Journal notes today, despite the AI chipmaker's strong report, many investors still worry the valuations, the swollen valuations, I should say, of AI companies and their aggressive spending plans could mark signs of a bubble. That name's been coming up, that word's been coming up again today. Investors have turned jittery about big tech's massive AI spending commitments, with shares selling off in recent sessions. Mixed jobs report we got today too, belated, also adding to fuel to concerns that the Fed will not be cutting rates next month. The jobs report, postponed because of the recent government shutdown, which ended just about a week or so ago, showed the U.S. added 119,000 positions, beating analysts' expectations for 50,000 jobs, but the unemployment rate unexpectedly ticks higher to 4.4%. Reaction in the Treasury market. Treasury yields did slip, with the 10-year note falling to 4.1% today. That's the one that impacts the fixed-rate mortgage rates. As we mentioned, Walmart rallied today 6.5% higher after the largest retailer hiked its financial guidance in its latest earnings report. Bitcoin got down to around 86,300 or so, its lowest level seen in about 7 months. Looks like stock futures as we head into tomorrow, mostly lower, as Wall Street set to end its volatile week and what's shaping up to be a rocky month of November after a winning month of October, which historically is something we don't often see. But it looks like month of November this time around is going to be the worst, it appears, since 2008, believe it or not. The S&P 500 is tracking toward its worst November since 2008. Of course, famously during the financial crisis days, amid mounting concerns over an AI-fueled bubble that not even NVIDIA and its CEO Jensen Huang could allay after its blowout earnings revealed just yesterday. Stocks did close sharply lower today, and also we got some insights here from the head of Walmart today on its latest earnings news. The gap between those who can and those who cannot afford everyday essentials is widening, according to the head of Walmart. According to Walmart's CFO, John David Rainey, who talked to Yahoo Finance this week, he said the disparity between the low-income cohort and the upper-income cohort has grown a little bit in recent months. I don't like using that word cohort, but he likes it. Now, if you look at October wage growth, the difference was at large as it's been in almost a decade, he said. Walmart stock did move higher today by about 6% after the company posted better than expected third-quarter earnings and raised its guidance. Once again, the Walmart shares up $6.50 today to $107 and change. The CFO there at Walmart, Rainey, painted a clear picture of the affordability challenge facing millions of people. Food prices, a big reason why, for example, prices are still roughly 25% higher than during the pre-COVID time, Rainey mentioned. While inflation inside Walmart's own basket has cooled about 1%, the baseline remains far elevated for families already stretched thin. His comments coming as Walmart reported a strong quarter with same-store sales in the U.S. rising 4.5%, lifted by the grocery, health, and general merchandise categories. Walmart also revising its full-year forecast, and that appeared to get investors excited about Walmart stock today. Rainey said the company is working to minimize the overall impact on consumers, especially for heavily imported items, including bananas and avocados. He acknowledged Walmart had to be very selective about where it passes higher costs along. The other big story, of course, cryptocurrencies taking a big hit in the last week or so, with Bitcoin dipping below 87,000, deepening the slide from record high levels just over a month ago when we saw Bitcoin above 126,000. Also sparking investor whiplash today was the long-delayed release of the jobs report, which appeared to affect the market, including the cryptos. Now, tomorrow, of course, we'll be on it big time. Tomorrow, investors will get a final read of November consumer confidence from the University of Michigan. The consumer confidence report will be coming out after the preliminary reading found the measure near a three-year low. Several Fed policymakers are also sent to speak, possibly offering some more insight into what the Fed's next move might be in December and beyond. The gap between those who can and those who cannot afford everyday essentials is widening. That's something that the Walmart CFO mentioned today and might be mentioned again tomorrow with more analysis and comments from the various Fed policymakers. Once again, the Dow coming in for a closing loss today of 387 after a strong start. The S&P 500 down 103. The NASDAQ down 486. We'll continue our market coverage and more. Lou Horne, head of CBRE, biggest commercial real estate company in the world, will be joining me live later this hour. Talk about what's happening with the recovery efforts here in Southern California, as well as the overall commercial real estate picture. That and more straight ahead. Let's get a break on the traffic scene now on this rainy afternoon here in 790 KBC. Rough day on Wall Street today with the Dow down 387. Yep, you heard me, down after a positive start early on in a big way, up triple digits early, down triple digits at the close here, down nearly 400 points to 45,752. The S&P 500 down 103 at 6,539. The NASDAQ down 486 at 22,078. The volatility index spiking again today of 12%. NVIDIA on its earnings news, coming off the earnings report yesterday, as we discussed at length with Daniel Ives from Wedbush here early on in the show. NVIDIA stock down $5.88 today at $180.84. It had popped in after-hours trading yesterday by about $10, pulling back nearly $6 here today. Taking a look at some of the other big names, Apple down $231 at $266 and change. Tesla down nearly $9 at $395.23. We'll be talking to Lauren Fix, our go-to car expert, later this hour about the start of the LA Auto Show coming up this weekend. That'll be big news, and also more about Tesla, too. Warner Brothers Discovery, looks like bidding is taking place for that company, and the stock was down today 21 cents at $22.88. Bitcoin, rather rough day, cracking below 87,000. That's certainly big news for all of the crypto folks who are watching cryptos very closely these days, with Bitcoin moving sharply lower over the past week or so, down about 30,000 from its most recent all-time high, which was above 126,000. Bitcoin right now at 87,065. Ethereum at 2853, cracking below 3,000 in the last day or so. Doge at the moment just below 15 cents. And now the latest news on 790 KBC.
November is heating up for U.S. soccer.
The United States need to be a little more nasty.
Big international friendlies for the men.
Oh, Callum, that was nasty.
And a Black Friday friendly for the women.
The expectations have always been here for this team. We understand that.
Listen anywhere on the go with the Westwood One Sports app. And for behind-the-scenes stories, catch the U.S. Soccer Podcast.
Boy, do we have an episode for you.
Follow and listen on your favorite platform.
Mottek On Money continues here now, 790 KABC. You've heard LA business and civic leader Rick Caruso on this program since the start of the year on the recovery efforts following the devastating fires in the Palisades, Malibu, and Altadena with his steadfast LA efforts. And joining us live now is another leader in this effort, and that is Lou Horne, the president of CBRE for Greater Los Angeles, Orange County, and the Inland Empire. Lou Horne is also chair of the Urban Land Institute. Lou Horne, thank you very much for taking the call here this afternoon.
Thank you, Frank, for having me. I appreciate it.
Wonderful to have you with us. And you've recently announced a new initiative. Tell us about that and your impressions of the rebuilding effort that's underway.
Thank you, Frank. Well, first of all, we're very excited to be announcing a group called the Builders Alliance. And the Builders Alliance was a program that really came through the efforts of a lot of private sector working with public sector professionals over the last 12 months. And the Builders Alliance, the essence of it is it takes about a dozen highly qualified residential developers and uses the purchasing power of their ability to buy building materials and coordinate staffs and deliver pricing on homes in the Altadena and Palisades area for affordable prices with a lot of options and certainty around delivery.
You did a fantastic job delivering the keynote speech at the State of LA business event, at the LA Chamber event, which I had the honor of being there with you, and you laid out in a tremendous and effective way what's happening on the commercial real estate scene. How is the recovery effort going at this point? What is your impression of how it's going so far?
Sure. Well, let me just add a couple of things on Builders Alliance, Frank. I think are important because I think it's very relevant. And I'll get to the commercial piece in a minute. But the biggest issue we see with the delivery of homes in the Palisades and also in the Altadena area is just the gap between what residents were insured for and also their certainty of working with developers that they can trust, that they know they can get fixed pricing. So in Altadena, for example, we've got 50 homes that we can deliver for less than $450 a square foot with the lowest price per square foot on a build in Altadena at $325 a square foot. In Palisades, it's the same thing. We have 50 homes that are available in options that are less than $700 a square foot, and about 40 homes less than $2 million, and 30 more that are actually available at this $320 a square foot. These are very affordable prices, but most importantly, they're fixed. They can be guaranteed by the developers, and we can also deliver on timing that actually makes the homeowner feel safe and secure, like they know exactly when they're going to have it built. This is all designed with an AI overlay. The AI overlay it gives you the ability to drag and drop a home right on your existing lot. Your lot has already been loaded into the system. This can all be accessed at a website called buildersalliancela.org. And it's something that I think everybody should take a look at, or you can look it up on the ULI website. I would say back to the city and the county, though, there's a lot of work that's been done up to this point, not a lot of development or housing going on. There's quite a few permits that are being processed, about 3,000 total, around 1,500 per community. And I think we're going to see a lot more building happening in the 26 and 27 timeframes, that's for sure.
On the air live with Lou Horne, president of CBRE, also chair of the Urban Land Institute. That is ULI that he mentioned, and again the website that he mentioned as well to access the Builders Alliance portal. That's buildersalliancela.org. And by the way, thank you very much for your leadership on all of this, and certainly Is there some sort of a master plan? Or you remember during the Northridge earthquake, coming off of that, Mayor Reardon back in those days was very aggressive in making sure that the recovery would proceed apace. And then that guy up in Sacramento was the head of the Operation Emergency Services, was on the air all the time talking about that. Are you seeing the needed urgency here to get this thing, get this recovery moving?
Well, I think there's a lot of frustration in the community, Frank. I know in the county they've actually got a dashboard that you can access, which will talk about cycle time and how quickly you can move through the county to get permitting. I think that there's still a frustration, I think, with most community members that it's just not fast enough. And that's really what this Builders Alliance is designed to try to provide for, is really certainty with, in some cases, pre-approved plans. In most cases, though, there's plans that have been built by these developers that have built in volume in the past, and they're with some level of assurance they can deliver these, and they know they can deliver these at a permitted price fairly quickly. So I think there's some frustration still. There's a tremendous amount of application that'll be developed, that'll be invested here, I think, coming in this next quarter, but there's still a pretty big hesitation on the actual rebuild of the homes themselves. I know Steadfast in the Palisades is really committed to rebuilding the park and some of the commercial areas so that it creates activity to give the community hope and life, so that as people are building, they feel comfortable that their community is coming back quickly. And I think that we're hoping to see a lot more activity like that. But right now, it's just not moving as quickly as we'd like to see it. That's for sure.
On the air live with Lou Horne, a giant on the commercial real estate scene here in Southern California, president of CBRE, also chair of the Urban Land Institute. And zooming onto the big picture now on commercial real estate, give us an update on what's happening in Century City, which is doing great, I understand, and downtown Los Angeles, which has had some big issues this year.
Well, I think we're definitely in Los Angeles, as well as most urban communities, we're seeing a flight to quality. I think the biggest issue that we have in the return to work is really just demand on these office buildings, which has created, a concern with the lenders and investors that we're just not seeing the same level of demand in most of the submarkets. However, there is, like in the Century City market area, there is a very high demand because you've got well-established institutional landlords that are well capitalized. Their loans are in place. They're attractive to investors, and we're just seeing high rents. In fact, rents that are actually increasing, and low vacancy rates in places like downtown Los Angeles. There's definitely we're starting to see it settle a little bit, but at the end, we're really seeing a pretty big migration moving to other markets where they feel they can find areas that are safer with more amenities and more walkability. So that the occupiers, are much more attracted. I think what everyone's realizing is that price is not necessarily the issue with these office buildings. The issue is really how can I attract my employee back into the office, because the name of the game with most companies is the attraction and the retention of high quality employees. And so the demand, you'll pay more for a building that has walkable amenities, is safe, and is a situation where it's attractive for occupiers to come back into the workforce. We're competing with people's homes. I mean, everybody has an office now at their home, and so there's a real attraction towards making sure that we're building in communities where there's a high desirability factor.
Lou Horne, I wish we had more time, and want to keep an open line to you on all of these important issues and your leadership here now with the Builders Alliance LA.org. That's the website, by the way, buildersalliancela.org. The Builders Alliance portal recently announced by Lou Horne and others involved in the recovery effort here. Lou Horne, the president of CBRE for Greater Los Angeles, Orange County, and the Inland Empire. Also the current chair of the Urban Land Institute. Lou Horne, look forward to speaking with you again very soon. We wish you a wonderful holiday season, and thank you very, very much for taking the call here this afternoon.
And thank you, Frank, for all you do for our community. You're just the best. Thank you.
Likewise, thank you very, very much, Lou Horne, live with us here on Mottek On Money on 790 KBC.
November is heating up for U.S. soccer.
The United States need to be a little more nasty.
Big international friendlies for the men.
Callum, that was nasty.
And a Black Friday friendly for the women.
The expectations have always been here for this team. We understand that.
Listen anywhere on the go with the Westwood One Sports app. And for behind-the-scenes stories, catch the U.S. Soccer Podcast.
Boy, do we have an episode for you.
Follow and listen on your favorite platform.
Mottek On Money continues here, 790 KABC. It's the most wonderful time of the year for car fans here in Los Angeles. Yep, the most influential auto show in the world is coming up here very soon, and that is the LA Auto Show. Believe it or not, it's coming up, the next day or so, the grand opening. And in town for it is the one and only Lauren Fix, co-host of the Drive Car Show syndicated radio program, as well as founder of Car Coach Reports. Lauren Fix, thank you very much for taking the call here this afternoon.
Anytime. Yeah, there's a lot to do in LA, as we both know. Besides, if you're going to head down to the auto show, you should get the engines revving by heading over to the Tesla diner. We had an opportunity to go over there.
Absolutely.
It was a lot of fun.
Let's talk about that. It has happened. Frank Mottek and Lauren Fix met at the famous Tesla diner, the one that's getting international attention there in Los Angeles on Santa Monica Boulevard, and it was a wonderful experience. Lauren, what were your impressions of the Tesla diner there?
I was pretty impressed. I mean, it's 24/7. They've got 80 charging stations, 2 giant screens. The food was great. The hospitality of the workers, they were really nice. And the experience was not what I expected. You know, you think it's going to be a diner, it's just a place to hang out, but there was so much to do there. And it was interesting. People were just talking, and it seemed very family-friendly. So if you're thinking about going down, it might be a fun little place to take your kids.
That's great. Special thanks to Sarah, the manager there, and Sebastian, who rolled out the red carpet for your visit there, and that was a lot of fun. And also the cool takeout boxes in the shapes of Cybertrucks. That was kind of cool.
Yeah, it was very cute. If you've ever been to Buc-ee's, it reminded me something along those lines. You know, using all of the angles of Tesla and the Cybertruck and getting kids excited about it. They had all kinds of merchandise there as well. And I think they did a nice job tying it all together. My gut is, knowing Elon Musk, you're going to see a lot of these running around the country, probably something on the East Coast. It's going to be a popular little place. And they said there were people around the corner waiting when they first opened, which doesn't surprise me. Anytime there's a new place, you want to go and check it out.
That's fantastic, Lauren. Well, thanks for stopping by, and you've had a whirlwind since we met, getting ready for the LA Auto Show. Tell us, size up the big show coming up here.
Well, we had a chance to see some of these vehicles early. I'm also part of the World Car of the Year jury, and we were out test driving cars in Pasadena and up on Angel's Crest. So if you live out that way and you saw a bunch of unique cars that didn't necessarily belong in this country, that were Chinese cars, we had a chance to drive those. But what we did see is what they are showing. If you're thinking you want an SUV, a 3-row SUV, you will see the new 2027 Kia Telluride, which is designed in California at the Design Center there. And it is pretty impressive. If you like the Telluride before, I think they did a great job with that. Other launches that are at the auto show that were either today or you will see them there when you arrive will be the new Hyundai Palisade. They have it available in a hybrid. A lot of people are interested in hybrids versus an electric version, as well as their gas version. Of course, they each have electric versions of them as well. The Ioniq 9 would be the Hyundai Palisade, and the EV9 would be the Kia Telluride. In addition to that, there's a performance car that was launched today called made by Genesis, which is the luxury line for Hyundai. So you'll see the race car there that they're bringing as a concept car, very impressive, as well as the GV60, which is their electric small car, available in what they're calling the Magma line. And that's going to go up against all the German performance vehicles. If you're thinking like AMG or the BMW M series, you're going to see those type of vehicles. So while you're still thinking fuel efficiency, at the other end of the spectrum, as always, there are performance cars.
All right, and we're talking fuel again, not so much EVs, right? Things have changed in the last year or so.
Oh, yeah. Things have changed for sure. The EV tax credit is gone. If you haven't put a charging station in your home yet and you're thinking about doing it at some point, you want to do that before the end of the year. On December 31st, that tax credit goes away. It's about $1,200. So make sure to look into that if that's something you're considering. But as far as what people are looking at, hybrids are super popular. People like them because you get the best of both worlds. You're getting the electrification when you're cruising around town. You can drive in EV mode. But when you get out on the highway and you don't want that range anxiety or having to wait at a charging station, you get the gas-powered motor that is smaller, very fuel efficient. I'm currently test driving a Hyundai Sonata. It gets 44 miles to the gallon and is a hybrid. And that's what people are looking for.
Very interesting, and I guess that Hyundai concept SUV, I think you mentioned it just now, that limited edition, getting a lot of attention, right? Anything else that's turning your heads? What about the good old muscle cars, Mustang, Corvette, and some of the other popular rides here in Southern California?
Yeah, Ford is doing a presentation slightly off from the convention center, but it's a Mustang experience. It's going to be there until, I believe, the first of the year. So if you love Mustangs, because everyone has a Mustang story, down near to somewhere around the area of the Peterson Museum, you can look it up, the Mustang Experience. You can look that up online, and you can actually see the history of the Mustang. It's been around for 61 years, and they're going to show their performance car, their GTD, but they also have the original cars and a full experience. If you've ever seen that human body where you go in and you can see the internals of things and how they work and how they got there, that type of experience, the same people who built the Mustang experience. So you can go in and get the whole experience, especially if you've got a family member who's always wanted one or you had one in the past, maybe a family member did. You can go in and experience that as well. That's off-site, but there's a lot going on site. I know that a lot of the different brands will be showcasing some of the new product that they have out as well.
All right, and we got a lot of business people listening on the high end. Anything that's catching your attention with Mercedes, BMW, Rolls-Royce, and so forth?
Oh, yes. Rolls-Royce has the most beautiful Spectre, which is thinking like James Bond. They have the all-electric version of it. You have test-driven that. It was actually quite a unique experience. If you like libraries and you like how quiet they are, you just have to go sit in this Rolls-Royce. It's so quiet inside. The insulation is so thick that it's literally silent inside. It makes a library seem loud. But even on the road, it's quite a nice piece. Other brands are also bringing out. The Cadillac has the new Vistic, which is a really impressive car. And again, there's a lot of electric, but there's a lot of hybrid out there. So,
yep. Lauren, thank you very much. Fantastic. If you get hungry, we'll go meet you back at the diner here while you're still here. Lauren Fix, co-host of the Drive Car Show syndicated radio program, as well as founder of Car Coach Reports, live with us here on Mottek On Money on 790 KBC.
November is heating up for U.S. soccer.
United States need to be a little more nasty.
Big international friendlies for the men.
Callum, that was nasty.
And a Black Friday friendly for the women.
The expectations have always been here for this team. We understand that.
Listen anywhere on the go with the Westwood One Sports app. And for behind-the-scenes stories, catch the U.S. Soccer podcast.
Boy, do we have an episode for you.
Follow and listen on your favorite platform.